Greetings, Dr. Jeffrey Scott here. This is my weekend market update for Sunday, December 17th, 2023. I titled this week, Was That a Fed-Induced Blow-Off Top? My email address, if you have any comments or questions, is hgsidoc@gmail.com. If you're new to my channel, please click the subscribe button, hit the alarm, and you'll find out when I post these. And I will answer any constructive and reasonable remarks and email comments. And thanks for being here. All right. So this is for education only. Anything I recommend is in the spirit of education, not investment advice. I'm a doctor, not a broker. I have none of the licenses that would give me the ability to recommend what to buy, what to sell, when to buy it, when to sell it, what your stop should be, because I don't know enough about you anyways. So anything I talk about, just take it as education. I am independent. Any tools that I use, I pay for myself. And trading involves risk, and you are solely responsible for any investment decisions that you make. Once again, we got a Wealth 365 event coming up in just a couple of weeks. I don't know exactly what my schedule is, and hopefully I'll be speaking at it, but whether I'm there or not, you should be. It starts on the 15th of January and runs through the 21st. I guarantee if you go, you'll be happy. It's the best time of year to buy wealth charts, which is a great platform and one that I use on these programs. And it's also when you'll get exposed to 60 or 70 other speakers. So I want to talk a little bit about the market here. What another great week. You could see the market was led of the major indices, which are in yellow, by the Russell 2000, yet again up 5.5%. The NYSE was up 2.5%, the Dow 2.6%, the Q's 3.4%, the Nasdaq Composite 2.8%. You could see many of those were red on Friday as the market had some profit taking, and hopefully that's all it is, as we got pretty extended. You could also see that up on top, everything is in new high, or at least 52-week high territory, and the Dow is actually at an all-time high. You can see on the week in the S&P 500, all the sectors were positive. Now, this is a Q tool from my friend Cigar, and this is a S&P 1500 view, and you could see up on the top on Friday, everything, all sectors were negative. Most industries and most stocks were down, so you probably had a little heat on Friday. But what's interesting is when you look at the 5 days, you had all the sectors up in the S&P 1500. 91% of the industry groups were up, and 86% of the stocks. So another strong week in the market. Now, we got overbought. You could see on Thursday, 91% of stocks in the S&P 1500 were above their midline, their Bollinger Bands. And we'll talk about this line here when we get to the bucket report. Here is the Nick Drendel report. This is just a great tool to have sitting on one of your monitors during the day to give you a sense of what's working. As you can see, the Qs were the leaders on Friday. And if one looks over the 5 days, the big winner was solar, cybersecurity. Down here, you've got biotech continuing to run, and semiconductors, which has been strong for a while, as has been retail. Looking over 20 and 50 days, I just wanted to show you that the only sectors that were negative was China or industry groups in 20 days, and energy has been relatively flat over the last 50. So we have really been in a strong market, and we are overbought. Give you a sense of overbought. This is another Q tool. And on the top in yellow, it shows a number of stocks above the 50-day moving average. This is a composite of the NYSE, the Nasdaq, and the Amex. In white are the stocks above the 200, and in red are the number of stocks with the 50s above the 200. When you look at this green dashed line, when we get up to this point, we're typically at a level where the market sells off. These blue arrows here, of which we saw several over the last couple of days, are called bangos, and that's another market exuberance signal that just, we're getting a little bit extended. Down here in blue, we can see that the small caps are starting to perform well versus the large caps, and in fact, value is starting to improve. So markets are extended. If we look at the individual indices and we look at this blue line here, which is the 13-week new high, new low ratio, you could see across all these markets we are extended. And again, you can look up here, the yellow line is really at a point where we should be concerned. So I am concerned that the market is getting extended here. Rates fall as the Fed signals a pivot. Notice the 10-year, the 30-year rocketed down 7.5%, almost 7% as the markets turned higher. Is there a recession in our near future? You get a recession. These are the rate, um, the 10 minus 2, 10 minus 3. The black line here is the zero line, and when we go above it, you get this gray band, which is typically when you get the recession. So we're nowhere close to the zero line, so there's no recession anywhere close, in my opinion. And if you look down here, the Fed Diffusion Index is above the minus 20. Recessions usually occur when you're below that. And here on the high yield index option adjusted spread, there's no evidence that we're having any credit tightness. So I can feel comfortable that there's no recession anywhere imminent. Now, the breadth, look at stocks above the 200, stocks above the 30, and the 13-week new high, new low, and the T2121 and TC2000 are all signaling overbought scenarios. Current buckets, here's how we ended the day Friday, 86% above and almost 30% above the upper Bollinger Band. This is the S&P 1500, and notice on Thursday well over 50% of the stocks were above the Bollinger Bands. When you consider the fact that the Bollinger Bands are created so that 90+% of the time stocks are within the bands, and you see half the stocks in the S&P 1500 above the bands, you are extended and you should be expecting some element of a pullback or sideways movement. NASDAQ on the left, NYSE on the right. We haven't had any Hindis since the September ones in the NYSE. Notice the NYSE, however, got up to 18% new high or 52-week highs, and it's eased off a little bit. There are no new lows within days on the NYSE. However, the NASDAQ's not as clean. Yes, the number of new highs has increased, but we're still seeing new lows. So as much as this market has improved, there's still some stocks that are underperforming. Now, I take the stocks that are $2 and 250,000 shares, and I run them looking at their performance on the week versus their ERG. The ERG is a combination of EPS strength, relative strength rank, and group rank. The high ERG or high growth stocks to the right, the low to the left, and what you see is you had really outsized return on some of these underperforming stocks, and as you got to higher ERG, the performance lessened. So this was another week of rotation and junk. However, when you look at the markets themselves, you could see only one of my many watch groups was actually negative, and those were some small stocks. And this was just a remarkable week, and I had 14 holdings when the week started, and had I held them the week, they were up 8.47 and all 8.56 rather, and all but one were positive. Again, that's not promise you that that was my performance. That would be equal of stocks, and most of them were leveraged positions with options anyways. Suffice it to say, it was a super strong week, and if you've taken some of my recent suggestions like AAOI as one, LABU, then you had a good week as well. Know your news and your earnings. We're now getting into the end of the year. The Fed has spoken. Wouldn't expect a whole lot of talking Fed heads over the last couple of weeks, and if you do, they're probably going to talk back the excitement about the rate cuts. But we do have some GDP, some jobless claims, and the PCE. I think we've got to the point now where the Fed is probably our friend, and now the question is how many and how soon on the cuts. Yes, we still have some earnings this week. I think FedEx will be interesting to see. As I say in the lower right-hand corner, it is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. Looking at my thoughts, busy week for the markets, great gains. Stocks surged after the FOMC voted to leave the target unchanged. Their dot plots and updated economic projections increased the number of cuts to next year to 3 in their mind versus 2. Powell also was relatively dovish in his commentary, although you did have Williams contradict him, which is what they do. They want to confuse us. So Powell goes to the left and the other guy goes to the right. Treasury market rallied. I showed you the big improvement in yields, but we're stretched. And as the broader markets have joined the rally, we could see more rotation, and maybe this will ease the heated markets without a significant sell-off. I still think we end higher than we are, but this could be a week of caution before we get to the time of the hopeful Santa Claus rally. Once again, and I'll put the link under the remarks section on YouTube, Wealth 365 event coming up in a couple of weeks, and I hope to see you there. All right, now let's go take a look inside wealth charts. So this is my weekly timing model, and I talk about it every week. It really looks at the spiders, the Qs, the diamonds, and the Russell. It looks at weekly prices with a 30-period WMA in my weekly bongo. When price is above the WMA, the bongo turns green, you get a buy signal. You could see we've been in a buy signal now for a number of weeks, and the markets have rocketed higher. Nothing's changed. We're in a buy signal. We're just, I guess you could say we're getting a little extended. That has changed. If we go into the daily indices, so Monday, we knew we had CPI, PPI, and a Fed decision. So no surprise, lazy rise on Monday. Tuesday, the market was rising, and then it pulled back a little bit, waiting on the Fed. We got the decision, we got Powell, and we closed near the high of the session on Wednesday. Gap up on Thursday, and then the market started to digest the news and really gradually eased off the rest of the week. Strong market did weaken some on Friday, as I showed you earlier. Now, I look at this as right now is nothing to be concerned about. Could be, but right now it's not. You have a little bit of a pullback. Is this a evening star? Not a classic. It's two dojis, two indecision days at the top. Will this lead to a gradual pullback and then a resumption of the rally? Wouldn't surprise me to see another couple of weekdays. But, was there that much damage there? No. Let's look at the rest of the market. We look at the Qs. The Qs were up on Friday, and you could see they're just continuing to go higher. The diamonds opened lower, but closed higher, but still was down just a tad. Again, a little bit of indecision and weakness, but well away from potential support. Even the Russell participated. Now, the Russell is just banging up against this level here, which goes back to the August 23 highs and is in a similar range going all the way back here to, let's see if we can fix that. Sorry about that. The mid-2022. So this is probably an important area on the Russell. Now, if you look at a weekly VIX, you can see the VIX was relatively flat on the week, down 0.5%. And the 10-year, the dollar bouncing around has come well off the high, so some strength on Friday. Commodities, dollar was up, so that means gold and silver were down. They were. Oil, trying to find some ground and something to build upon down here, has sold off despite multiple OPEC comments about tightening. Natural gas is dead, and 10-year had a nice, you can see the fall on Wednesday, but a nice drop, even dropped below this 200 period moving average, which is pretty remarkable. Did have a better day on, well, it had an indecision day, down only 0.5% on Friday. So yields down, dollar bouncing around at a low, oil down, all good things for the U.S. stock market. We look at let's look at some breadth actually real quick. And what I want to show out, if the stocks are pointing up, that's talking about the RSP or the QQQE, the respective equal weight indices. If they're pointing down, as they did for quite some time, they're pointing towards the SPY or the Qs. Notice how both markets are now starting to favor the equal weights. If you look down here, you could actually see the IWM is now eroding on the strength of the Qs, clearly broadening out of this market. When we look at the individual sectors, I'm still tickled about LABU versus the spider. This is a leverage 3x. It was up 25% on the week. We've been long this for a couple of weeks and talking about it actively. A lot of strength. Materials improved, not communications, not energy. Financials, especially regionals. Industrials. Technology looks good. Staples and utilities lagging. Real estate doing better, discretionary doing better. So we definitely have seen a broad-based improvement. If we go into the scanners, and let's start with the heat map, and we look at the S&P 500, you could see even though it was down a tad, I believe it was on Friday, it really was a strong day, or excuse me, not a weak day, as you can see a lot of strength in big cap tech. If we look at the wealth scanner, what's really changed here is notice how many things above 800 we have. All you got to do is go back a month ago and nothing was above 800. This is the relative strength tool. It's an algorithmic relative strength is what I like to think about this in wealth charts. And I like to rank a large basket of indexes, sectors, industry groups to see what's working in the market. And what you can see here is a lot of things are working. In fact, you got 860, which you never see, which is capital markets. So think something like KKR. Looks just like that. Wow. Hope you got something in that group. We talked about this last week, but it already was up at the 76 range. Don't really know what minimal volatility factors are, but it's doing okay. Value stocks, infrastructure, semiconductors, internet, construction, Russell growth. So let's think about that. You have value stocks and you've got growth stocks all at 850. Wow. Semis, healthcare, discretionary rather, mid caps, industrials, biotech. Strong week for biotech. Strong Wednesday for biotech. Wow. Core dividend growth, materials, Russell value, mid cap. There is broad-based strength in this market. And you know that. Your portfolio has likely come up quite a bit over the last couple of weeks. So what do you do right now? I think that before I go and I look at my scanners, I have to look at a couple of things. We are extended. We're extended by any means that I look at. I am going to be careful right now. It would not surprise me if we saw some flags. I think we already are seeing a flag on the spider and maybe on the diamonds. I think we go higher, but it wouldn't surprise me. And what I'm kind of expecting to see is that are we going to just, before we go higher, and that would be my expectation, and run into maybe the first week of the new year before the market perhaps settles down. But it would not surprise me to see a pullback here. Therefore, although I'm still long this market, I'm not feeling the need to go all in and go all margin. I did a week ago. I did 2 weeks ago. But I think the market's a little different. We're extended here. Let it cool off. If we go into the scanners and we try and find things that are working, there are some things that look really good. So let's go into my pullbacks and uptrends. This is my favorite scanner for finding stocks. Why do I like pullbacks? Because if you pull back, you're probably not too extended. So let's start with Amazon, the first one that comes up. This thing has had a big run. It's at 65% on the high jump, not too far. All three bongos are green. This red thing here is that pullback. This yellow is the squeeze. These three dots here tell me volume, breakout, momentum. Relative strength has not picked up above the moving average, but it's right there. I'm okay with that. Volume looks good. So here's a stock that's had a big run up, trailing on the 17, had a big move up 1.73% on a negative tape on Friday on big volume. That looks interesting to me there. Now, there were a bunch of shippers when I did my analysis this week, and I think what's going on is because of what's going on in Israel, Gaza Strip, Iran, and the area, there's been some concern about the oil having blockades and take more time and more premiums, and they can charge more. A lot of the shippers have dividends. So this is one that made my list, and this is ASC. Now, here's another one, Scorpio Tankers breaking out there. What else? I know there's a bunch of them here. I could show, well, there are several. DHT is another one that looked good. They may not be in the scan, but there's a number of these. Here's one that had a pretty deep pullback to the 200. Look at that volume. So this is one place that you might want to look at. GE, General Electric, strength by eliminating businesses, because this is really a smaller GE than it was before, say, 2007, 2008. At a high, but massive volume the last 2 days, the same three dots from a squeeze. Relative strength, okay. Volume looks good, not extended. Let's see what other. Sunoco. This is one that I thought was interesting. It pays a big dividend. It is a refiner or an MLP. I can't remember which one this was, or both. But look at the breakout, nice move, up, pullback, breakout, massive volume, relative strength, and OBV look good. I like that one a lot as well. Last week I talked about Arista Network. It had a nice week. I'd rather buy it here after the pullback than buy it up here where it's starting to get extended, and you can see 100 on the high-low jump, which is my extension tool. One of the big movers has been AVGO, and again, it's extended. I have a hard time buying things up here. I'd rather wait for them to pull back. GEO is another in the nice looking play here, pullback going up there as well. One thing I could point out to you, which is a negative, is there's only a couple of 3 dots and 2 dots, which is surprising considering the strength in the market. Could be there's just not any pullbacks after the big run we've had. So I could go over to Momo up, and that's going to ignore everything else and just look for dots. And you see the same thing. Now, one that's just amazing is Costco. And I know my friend John Person's been in this stock. But look at this major move here. Now, it's extended. They had a huge dividend, special dividend that they're paying. But it broke out of the box, and I don't think I'd be chasing it here. But wow, what a week. CyberArk, the hack group, the cyber stocks look good. And this one might be setting up as well. Good volume, 3 dots. Relative strength and OBV look okay. GLP Global Partners is another one. Don't know anything about this stock, but it's running right up to 17. And look at the volume that came into the stock on Friday. Lots of good-looking stocks, but many of the stocks, like this one, are extended. International Seaways is another one of these shippers. Now, I don't like this one at all. It's really pulled back a lot. It's got to get above the 50, so we're not going to show you too much about that one. Palo Alto Networks looks pretty good as well. Give you a little pullback opportunity, but I'll look to see that going higher before I jumped into this. Royal Caribbean, again, extended, 94% on the high jump. What a nice move. I guess people are taking cruises. Problem is I bought a second house. Now it's hard to go on cruises, and I love cruises. Any rockets with 4 dots? Same stocks. So it's interesting. The market is strong, but a lot of the stocks are extended, and I haven't found things that really just look viable here. One that looked interesting to me was APPN, Appian Corp. That's not it. I thought that may not be the right one. No, that's probably not it. I got the wrong. Is it App Loving? Let's see. Let's see if I can find this. Excuse me. Well, I think it's called App Loving, but now I can't remember the ticker. So I think the message here is markets are extended. Individual stocks are extended. There's still some nice looking stocks that I showed you, and I had no trouble when I went to my buy list to find stocks that were attractive. But as I've been saying, we are extended, and I'd be a little careful going all in here. So let's look at some of our favorites. AAOI, this is one that I had. I actually sold most of my position early at Friday because of an options expiration. But this has had a huge move. We talked about it back here. Widely held Apple, not overly extended, coming with a double top territory. AMD has had a big run, but do I really want to buy it up here? Not overly extended by my math. It's only 64. FTAI has been in a beautiful uptrend. Look at this weekly chart. I'm not sure it's a great buy point. Keep going down my list. Oh, you know what? I didn't load up the new one. So hold on a second. My bad. So let me go in here and let's clear that list. I apologize for that. So let me do a couple of things. This is actually good for if you have wealth charts. Import from CSV. I want to put it in my buy watch because that's what we're looking at here. And I'm going to choose a file. And I create little CSV files. Here's my buy watch. Upload. And while I'm doing that, I want to also go into my combo buy because this is what I'm going to share with you. And I'm going to clear it, make sure I have the most up-to-date. And then I'm going to come back here, import from CSV, select watch list, and I'm going to go to combo buy, which I think I passed already, perfect combo leaders. And then I'm going to find my combo buys, upload. And that's how easy it is. So let's go back into the CAT scanner and see with the new list, do I have any 4s? I've got some more 3s here, but I think we looked at most of these. So don't see a whole lot of a change here. All right. Yeah. All right. Let's go back to the watch list and let's go back to my buy watch list and we'll finish up here. Here is a semiconductor that I've been in and out of, and I don't usually bottom fish, and the reason I don't bottom fish is it's going to run right into the 200, but that's 6 points away. Look at the volume that's come into this stock. This is Allegro Microsystems. Obviously, it's a bottom fish, relative strength and volume look okay. There's Amazon. You want to see another leader? Look at Abercrombie and Fitch. When I buy it up here, I find it hard to buy it. It's pretty extended, but it keeps going high. Here's that AppLovin. So here's a stock, big uptrend, pull back, broke above the 50 on good volume. Relative strength and OB looked good. I thought that one looked interesting. These are all stocks that I'm going to be watching. A lot of biotechs look like this. They're bouncing off the bottom. This is Bicycle Therapeutics. The good news about biotechs is they don't make earnings, so you don't get earnings surprises. They often get bought out by big pharma. Look at the one we talked about that I put you in, Immunogen, recently. But they sell off when markets get weak. Well, biotech is moving, and a lot of biotech made my week this week. The CBOE has pulled into an interesting position here on the 50. That's what we call free parking, and it's been a good place to buy in the past. So I'm going to watch that. I'm not going to buy it just because it hit the 50, but it looks to me like it might be reversing, so I want to keep an eye on it. CrowdStrike is another big leader. Again, what is it going to be? It's at 100. It's a little extended. You'd expect these things to pull back into that 17 and give us another chance in. CureVac is another one of these biotech stocks that are totally beaten up. And I do play these, especially after a base for quite some time. There's your DHT. Fulcrum Therapeutics is another low-cost biotech. And you could see all these have had a move up off the last month or so. Dorian LPG is another one of these marine shippers. This one started moving as well. See if there's anything else that I wanted to point out. You want to see another good leader has been PDD. But again, well, it's interesting. It's only at 76, I guess, because it's not that extended from the 17. But I look at that chart, and that's, to me, is still a risky area, although I bet it goes higher. And then another one that's been an interesting performer this year is SMCI. And this might be giving us a chance to get back in. It's broke above the 17 and the 50. That's a wealth signal. That's an EMS signal. Decent volume. Relative strength and OBV look good. That's something you might want to watch. On your list, Star Bulk is another one of these shippers. Same pattern. And I think that and Twist is another one of these biotechs. This one broke out this week. So, and then our last one I'll look at, because I think it's a nice looking chart, is Guidewire, which is an application software. Nice uptrend pullback. Look at the volume on Friday. Remember, Friday was triple witching, so you wouldn't be surprised to see a lot of volume. So you have a volume breakout momentum out of a squeeze. Relative strength getting better. OBV looks good. So there's a lot of things to like in this market. My concern is it's extended. I'm going to be careful, but I'm still very long, and I hope you have a great week. I'm planning on doing one next week, but if I don't, I hope you have a happy holiday season, and we'll see you soon.